I want to welcome everybody back. My name is Vildana Hajric. I'm a reporter with Bloomberg, and I'm excited to delve into our next topic, which is central bank digital currencies, something that's gained quite a lot of traction over the last year. And I want to apologize ahead of time. It's rather a very large topic, so we might be jumping from point to point. But I want to give a quick overview. There's certainly a lot to talk about, but in terms of central bank digital currencies, or CBDCs as they're known, it's cash created by governments. They're not tied up with a regular commercial bank. They represent, to a lot of its fans, a sort of a future of speed and efficiency. And the development and interest and research of CBDCs has picked up over the last year. We now have some central banks looking into this and doing some research, our own central bank included. And they're not without critics. So there's a lot of issues over access and concerns over privacy, and their potential to shake up financial stability is another worry for a lot of people. So I'm joined today by two experts who will help us break all of this down. Cuy Sheffield is the Senior Director and Head of Crypto at Visa, and Sheila Warren is the Head of Data, Blockchain, Digital Assets, and a member of the Executive Committee at the World Economic Forum. So welcome to both of you, and thank you so much for joining us. And Sheila, I'd love to start with you. I know we were just chatting right before we got started with this, but I'm hoping to get you to imagine that you are speaking with Jay Powell, the chairman of the Federal Reserve, and if you had a chance to speak with him and you had to make the case for CBDCs, what might you say to him? What might be the advantage of widespread adoption of CBDCs for governments looking to launch them?
Thanks. Yeah, well, I'd start by noting that as with any issuance of anything that is a new technology or innovation, we should always start with the problem that we're trying to solve. And so here, I think for the United States specifically, those problems vary around the world, but for the U.S. specifically, there are a couple of advantages I think a CBDCs could confer, and they're related. So one is around fraud reduction. We know that with COVID stimulus payments, as an example, there was a significant amount of fraud in the delivery of stimulus checks and things like this. A digitally issued dollar could actually help reduce the amount of fraud by making the money more traceable and more direct, ensuring it gets in the hands of those that are intended to receive it. Secondly, which is really linked, is the programmability of money. So one thing that cash can't do, and that other methods that are not fiat money maybe will not be as relevant for, is this idea of programming money. So things like tax receipts, even welfare payments that are meant to go for certain kinds of goods and services. These things can be programmed into money that a CBDC could offer in that context. And so you would have, again, more control to some extent over what people were spending this money on. Now, there are a lot of debates about whether that's a good or bad thing, but those, I think, are some of the perceived advantages that a CBDC, or a digital dollar, as people are calling it, could confer.
And we have heard from Jay Powell actually earlier this week, talking to the Senate and the House of Representatives about exactly this. But Cuy, I'm hoping you can sort of tell us a little bit more about what, in practice, the adoption of CBDCs might look like. So I was speaking with a Bloomberg colleague of mine earlier this week, and she was asking me, well, what might this look like? Will it look like, Venmo, something we're all really familiar with, except just tied to CBDCs? Or in practice, what does it look like?
Yeah, I think it's a great question, and it's still really early in terms of thinking, how should CBDC be designed as a product? And we think there are a number of really important principles that if a central bank chooses to create CBDC, that they should keep in mind. And one, we think it should be accessible inside of existing commercial banks and fintechs and digital wallets. We don't think you should have to go and download a new specialized app just to be able to get access to CBDC. We think it should be able to be spent at every merchant. And so if you want to create something that has the utility and can be used as digital cash, you need to have acceptance. And so you need for it to be integrated into the existing payments ecosystem. So we think it's really important that any central bank digital currency is built through a public-private partnership. And there's ways for consumers to be able to access it within the existing banks and payment products that they know and trust today.
So if you were telling my colleague about this, what might her life look like if we did have CBDCs? What would be different about her life? Would it be faster to make payments? What exactly does it look like?
Yeah, so I think that the question is really, what are the use cases where CBDC can create better payment experiences? And I think one helpful way to think about it is not looking at CBDC just in a vacuum. We have to understand it in the context of stablecoins. Stablecoins kind of being an example of a fiat-backed digital currency that are being actively used today. Now, what are they being used for? Stablecoins are being used very much for cross-border payments, for B2B payments, for remittances. And so stablecoins aren't being used, to buy your coffee. They're being used for, many new different payment flows. And so I think when people talk about and think about CBDC, it's less useful to think about this as, is this just another way that you buy your coffee versus how can you upgrade payment infrastructure to enable more efficient payment flows that are difficult today, like cross-border payments.
Sheila, if we do have central banks picking this up and we start to see CBDCs actually developed and put to use, what might the power struggle look like if we do start to see this being developed?
Well, I think there's a really interesting question, as to which country's CBDC winds up being almost the most programmable, the most useful, and what it's being used for. And so I think we can't really distinguish the ease of use of these things, and I think some of Kuy's points, from the soft power elements here. And so I think that we certainly could see geopolitical fallout, let's say, from competing central bank issued digital currencies that are maybe rapidly, dominating certain kinds of uses, for example. That could be really interesting, right? I think the easier that money is to use, or a country's money is to use, that paves the way for certain kinds of advantages that we haven't really begun to imagine yet, because we're kind of all operating in the same environment. So I think that's one thing that could be interesting. I also think that, my view has always been that, crypto, stablecoin, and CBDCs have different roles to play in a broader financial ecosystem. And I think Kuy is saying this is to some extent as well. They're different things. And so I think people often try to posit that one of these, there's going to be this big, fight among CBDCs and Bitcoin or whatever. And I just don't see it that way. I see these things as all important and relevant, and they address different issues. And again, we should deploy them focused specifically on what problems we're what is the point of them? What is the problem we're trying to solve? So I do think, though, that there's some geopolitical, struggle that could come out of this. I think it's no surprise and no shock that part of the reason a lot of countries are looking at CBDCs more seriously now is because of what's happening in China, and because of DCEP and the experiments that China has been doing very openly in terms of their own digital yuan. So, there's a reason people are paying attention here, and I think it remains to be seen how it will play out ultimately.
Yeah, and we do have some testing being done in China for a digital yuan. So in terms of those geopolitical issues that might arise, I mean, is there sort of a balance of power to be had? Does the dollar fall to the wayside if we do start to see a pickup of CBDCs from central banks all around the world? Or what does happen?
Yeah, I think these things are interrelated, right? So a CBDC's use is going to be predicated on how important that particular country's currency is seen to be. And so, again, there's a whole discussion we could have about dollarization of economies and whether that's ultimately a good or bad thing, and for whom it's good and for whom it might be bad, right? So leaving sort of that very important discussion aside for the moment, I think there are a lot of things that determine soft power and the use of currency beyond the, ease of use of the currency. But what I'm saying is, I do think that there is going to be a practical element to this. And so if you have a currency that's already seen as quite strong or powerful, right, in terms of being something that other economies want to peg to or whatever the reason might be, and one of them is much, much easier to use than the other, that is going to have consequences. What those consequences are going to depend on a whole variety of factors. But, to pick up on something Kuy said earlier, I think it's just really important to not look at any of these things in a vacuum, and to really understand that, money, politics, these things really do go together. They're systems of power in our society. And so we can't be naive, thinking that the issuance of a certain form of money, the issuance of a different kind of fiat is suddenly going to dramatically change anything about the way the world works in the immediate short term. I do think, though, that it's important to kind of have the understanding of what could transpire and be planning for that down the line. And I'm sure that that's exactly what the Fed is doing as they explore this digital dollar project.
And Kai, I know both of you were just saying there's a sort of all of these things are interconnected, and cryptocurrencies and stablecoins and CBDCs. But if we do have CBDCs in the world, what happens to Bitcoin? What happens to cryptocurrencies? Do they sort of fall to the wayside because they lose out in terms of the popularity contest, or how do you see that developing?
Yeah, so I think between Bitcoin and CBDCs, they're completely separate products with completely different value propositions. And what we see today with Bitcoin is, the point is that it is independent from governments and central banks. And it's, we see most of the demand for Bitcoin is to hold it, as digital gold and as a store of value. And so, we don't see a lot of demand for people to spend Bitcoin. I think the idea of, both stablecoins and CBDC is really more of a payments technology and payment innovation where you can create these new form factors for fiat that can have new properties that can lead to new payment flows. Where Bitcoin is more of a savings technology in a way that consumers and businesses are looking to store value.
So they can sort of live side by side. Go ahead, Sheila.
Yeah, I mean, there's no cage match, right, between Bitcoin and CBDCs. That's not a thing. They're very, very different things, and they both have a role in the ecosystem. And I think, and stablecoin, by the way, I'd also throw in there. There's no three-way cage match going on here. These are different things, and they have different functions and purposes. And I think Kai's exactly right. We need to stop kind of conflating them and putting them all in the same bucket. And I think it's important for people, who are talking about these things now to really understand the differences among them, and to not, there's not going to be this massive offboarding from Bitcoin into U.S. digital dollar, when that transpires, and vice versa. People who really want to know that their money is FDIC insured and government backed are not going to suddenly, move over into Bitcoin. So these things, they really are so distinct in terms of their function. And I think that it's exactly right. It's really about the form factor that we're talking about here. What can you do with these things, and what can the technical innovation really provide? And that's where I sort of started with my comments addressed to Jay Powell, to your hypothetical, which is it's really about this programmability aspect, right? That is, I think, what CBDCs are borrowing, if you will, from crypto and stable coins, is this concept that we can now program money in different ways to make certain things easier or even possible.
And we are getting some questions from the audience about some of the risks associated with this. And I think we can sort of break it down into a couple different buckets, including some privacy issues. But Kai, I'm hoping that you can sort of touch on how potentially this might impact the role of commercial banks. Does it reduce their role? Do they get cut out of this? Or maybe you can describe to us what you see happening if we do have CBDCs, and what role commercial banks can play, if any.
Yes. So we think there's a really important role for commercial banks within CBDC. And I think, many years ago, if you kind of heard CBDC, when people heard it, what they thought was the idea of downloading an app from the central bank and having an account and a relationship directly with the central bank. But I think a lot of people across the world have realized that, that's a really big challenge. Central banks aren't used to doing, customer service. They're not used to managing direct relationships with consumers and having a technology product that they're delivering. And so now we've seen a lot of the momentum and interest shift towards this concept of two-tier CBDCs, where the CBDC would be distributed through commercial banks. And so you can imagine that the digital currency wallet that the consumer would interact with, it wouldn't be provided by the Fed, it'd be provided by a commercial bank. So similar to the way that cash, is distributed through commercial banks across the world, CBDC could be distributed through both commercial banks and fintechs. But we think that the really important consideration here is commercial banks have to be ready. And so this is something where, Visa has a unique perspective because we talk to, the most conservative, slowest moving commercial banks to the kind of innovative, high-tech fintechs and crypto companies. And they're all at different places on the spectrum of digital currency readiness. and who's going to be ready to have a wallet that consumers can use. And it's really important that central banks consider they can't just say, we want to do CBDC and it's here tomorrow. They need to have a way that commercial banks can participate and have those commercial banks be ready to be able to distribute and offer products around that CBDC.
So Sheila, I'd love to hear from you on this as well. Does that mean that discussions about commercial banks losing out on this, are those maybe fears a bit overblown?
I would say so. Certainly our view is that every actor in an ecosystem is going to have a role to play. And I think that we're still sorting out a little bit, where the public sector ends, the private sector begins, if you will, or what effective collaboration between those two groups can look like, those two groups specifically, particularly when it comes to the commercial banking sector. But yeah, I think that's a fair characterization. I think that, again, like with many things in this space, there's a lot of drama that when you kind of really look at it, doesn't necessarily exist. And it's really just sort of ordinary kinds of concerns that come up anytime there's a new innovation, right? You're sort of carving out a lane and figuring out, what makes the most sense and what's going to work together in this broader ecosystem. And I think that's just what's happening here. I think it's a very normal and natural evolution, as we get more serious and more sophisticated, and as the technology and the innovations here mature a bit. So I don't see anything here that's a cause for, for concern or for drama.
What about privacy issues, where you have this sort of the fear that you're going to lose out on the anonymity with that you might have with cash?
Yeah, well, privacy, it's a design question to a large extent, right? So people have this concept that, for example, Bitcoin is totally anonymous when in fact it's pseudonymous, right? So there's a lot of misconception, I think, about these things. But certainly, I think one of the things that's talked about a lot is, if we have a digital yuan, is that going to lead to a surveillance state? These kinds of questions come about. These are design questions. And so there is a certain amount of privacy that can be embedded in any particular issuance of a currency, a digital currency, and that's a decision that's going to be made by the issuer. And so I think there are legitimate concerns, but I think that my hope is that there'll be transparency about the level of privacy that is baked into each of these different offerings, and consumers can make their decisions about which are going to suit their needs. But I think that what we should be asking for really is the considerations of these things to align with expectations that people ordinarily have. But fundamentally, look, is anything ever going to be as private as my handing you $1 and walking away? I don't think so. And as many have said, if you were to design cash today, physical cash, there's no government on earth that would be down with that, right? That would jump on board with that plan, because it provides this kind of absolute privacy. So these are things we need to be considering, but it doesn't mean that we shouldn't be exploring where we can bake privacy by design into a particular offering and do the best that we can to ensure that we are preserving the aspects that are really important to the functioning of an effective system.
Kaya, I'd like to switch gears a little bit here. I'm hoping you can talk about who potentially might be the winners in a world of CBDCs.
I think one important constituency for CBDC that isn't often discussed are developers. And I think what we've seen with stablecoins is they've really become a developer platform, where they've almost been this like open source API for dollars, where there's this vibrant global developer ecosystem across the world, building new digital wallets, building new financial protocols on top of them. And that's leading to significant innovation. And that's great for consumers and businesses. So I think with CBDC, it's important to figure out, what role can developers play? How can you create a developer ecosystem and make it easy for them to come in and build? And I think if you can create that ecosystem, that benefits, consumers and businesses, because you'll have new innovations that emerge from it.
What about in terms of, this race between countries to try to be the first to develop this? So I know I already referenced Jay Powell's remarks earlier this week, but he said, there's potential pitfalls in getting this done as quickly as possible, that moving rather quickly is a bad idea. So do you feel that there's any drawbacks in terms of moving maybe not as hastily as some would like on this, or what might be the pitfalls of not developing it as quickly as CBDC fans might like?
There was a
Sheila,
lot of criticism early on around the U.S. is so behind and falling behind and behind. And what I always kind of reframed is the U.S. was late to the game, but the amount of resource that the United States can bring to this question, and just the weight of the issuance of something like a CBDC that's fiat American dollar, you can't discount that. And so I think this race, concept is somewhat overblown. I think, again, these are going to be very different things. Let's just be clear what we're talking about here. We're really talking about digital yuan and digital dollar, right? So they're going to be very different things. They're going to have different, privacy elements, for example, right? They're going to have different immediate uses. They're designed for probably different purposes. I mean, one imagine. So again, I find this kind of thing a little silly, to be honest. I think that countries are going to get there when they get there. I would certainly say at this point in time, any country that's not looking at this space very, very closely, and I don't know of one that's not looking at this very closely, to be clear, is definitely, I don't know what's going on with that. That's a clear mistake. But these decisions are not things that should be taken lightly. And I think there are tremendously significant design decisions that need to be made that have to reflect the priorities of a particular political regime, to put it really bluntly. And those are not things that should happen quickly or overnight. So I'm generally in favor of, being clear about the plans, being clear about timelines, but taking the time to ensure that what you're building is going to be inclusive. I don't see any point in building something that's just going to kind of service the existing systems and not actually add benefits, to whether that's bringing more people into systems that ought to be brought along, giving them more opportunities. If we're not doing those things, then what's the point of this? It shouldn't just be like a kind of a fad that we're responding to. So I tend to think that, careful, thoughtful design is never a bad thing. And if that means that one thing goes first and one thing goes a little bit later, I personally don't feel that is something to be concerned about. I think it's something to probably embrace, because there's reasons that those things are probably happening.
And so, in your opinion, Jay Powell moving a bit slower on this is all right?
I think it's fine. I think that we happen to know that there were a lot of people at the Fed who were paying a lot of attention to this for quite a while. So they're not starting from scratch, right? There are people who have deep expertise, both technically and from policy perspective, on this topic that have been at the Fed for quite some time across the different branches. So just because they're publicly saying something now doesn't mean that for a while there hasn't been a lot of exploration and thought being put into some of this already, right? But these are decisions that I think are potentially quite significant. So again, I think that there's a certain move fast mentality to things, and I think that's very true in the crypto space for a variety of reasons. When it comes to fiat money, I do think it behooves any system to be thoughtful and careful about that.
Yeah,
move fast and break things.
There's still so many open questions and design considerations. And just the question of what is the use case? What use case are you focused on? What are you solving for? So you can't move forward and build something when it's not clear, here's specifically the use case. And I think the other kind of benefit here is that the private sector is moving rapidly and is innovating. And I think a lot of the innovations coming out of the private sector, one, are a fantastic area to observe and watch how these technologies are being used, and then how could they be incorporated into potential CBDCs in the future. And so all of this infrastructure is being built out, for stablecoins, wallets, custodians, exchanges. So it's not that, there's no innovation, nothing is happening. And I think it's better to take time and see kind of what can the private sector develop, and then what role should central banks play over time.
So Kai, can you actually, I'd love to follow up on that. Are there any technological barriers that we still need to overcome to start developing CBDCs?
So I think about CBDC more as, fundamentally a new form factor for money that is a digital bearer asset controlled by a private key. And I feel like that's what makes it a digital currency. If you're not talking about a bearer asset controlled by a private key, then you're talking about something else. You're talking about RTP and kind of other payment systems. And so there's still a lot of technology and infrastructure that has to be built out to be able to support this new form factor for money. So you need the ability to securely manage, private keys, if you have a digital bearer asset. And I think that's, being built out rapidly in the private sector, but will still take time for, every bank to be able to integrate a digital currency wallet these are things that are going to take years, are going to require, global trusted brands and technology providers to help with.
Sheila, does the pandemic in any way alter the timeline that we might see this happen? Does it speed it up potentially?
Well, I think it sped up the discussions internally. Whether it speeds up the build, I think it's, Kai's exactly right. I still haven't heard, and maybe I just missed it, articulated exactly what the initial use cases would be, for this. And I think that's really important. So I hope that, there would be a strong element of financial inclusion in this, and thinking about parts of our society that have been left out of traditional systems and the wealth creation that can occur in those systems. But I know I haven't really heard that. And so I think the pandemic has spotlighted inequity in our society in a very powerful and a way that's impossible to ignore. I think that, as I mentioned earlier, the fraud, that occurred in these stimulus checks and things like this is known and documented. And so I think that there are use cases that were highlighted by the pandemic. Whether those are the use cases that the Fed intends to address, I don't know. So I'm not really sure how to answer your question. I do think that this pandemic in general has caused people to be more creative in thinking about what you might program into these new form factors, right? Like what that might look like, which I think is a good thing. I think it's spotlighted where inefficiencies and other things are hugely problematic. But is this the answer to those things? I mean, it depends on how you roll it out, right? So there's a lot of consideration that has to happen there. So has it made the issue, the building of it and all that faster? I couldn't possibly say. Has it made the conversation more amplified? Absolutely, as you would expect.
And so if we are thinking about some of those inequalities, as you just mentioned, what part of the population might potentially be left out? I know oftentimes we hear, somebody who doesn't have a smartphone might not be able to participate. Is that sort of how you're thinking about it?
Well, I think you can't separate issues of financial inclusion from historical, reasons that exclusion exists. And so I do think things like digital divide are critical to this, So we talk a lot about, when we talk about financial inclusion, we're often talking about people that are right on the border of the financial system, not those who are really outside of it. And those people exist in our society as well. We tend to think of them as people in other countries or whatever. We have these kinds of, culturally, frankly, absurd notions about where exclusion is happening, but it's happening, in my city of San Francisco. I can tell you very clearly. And so I think that we have to kind of consider, what are the barriers? What are the infrastructure barriers? What are the educational barriers? What are the access barriers? And what are these other things? And it needs to be a holistic view. So it's not just that, we can roll out this new thing and suddenly, everyone's going to be great and it's all going to be, fine and dandy. That's not how any of this works. And there's history, years and years and decades of development economists and, others who focus on economic justice that could point the lie out there. So in my mind, anything that's going to have actual impact in helping marginalized members of our society is going to have to be a much more systemic examination of how this particular thing, how, a CBDC would actually fit into a broader overhaul of our system. And that's something that I certainly have not seen as much discussion as I think we should be having about.
Kai, I'd love to know if you guys are having these discussions at Visa. I know we only have about a minute left, and we do have some questions from the audience. So I'd love to get to at least one of these. So somebody wants to know, do either of the panelists believe that CBDCs will be backed by Bitcoin, that governments will actually be buying Bitcoin? So Sheila, maybe we can go with you. And apologies, just a minute left.
Yeah, those are very different questions. Do I think governments will be buying Bitcoin? I'm sure there are sovereign wealth funds that own Bitcoin, whether they'll admit it or not. So that's kind of one question. Do I think a CBDC would be backed by Bitcoin? I guess I'm not really following that, because the premise of a central bank digital currency is that it's fiat money. So it is the same thing as the paper dollar you're holding. It's just a digital version of that. So no, I don't think that would be something that would happen unless there's some new product that's conceived of that probably has a different name.
I'd love to give maybe 10 seconds to each of you for final thoughts, and I realize time has run out quickly. So thank you both.
Yeah, I just add that I think there needs to be public-private partnerships, and I think we're seeing a ton of activity and innovation with stablecoins. And there's a whole private ecosystem that's here to help central banks figure out CBDC.
Sheila, final thoughts?
Yeah, I just think that we need to be very thoughtful about all of this and engage a variety of actors, private partnerships, civil society, academic thinkers, a lot of activists. Frankly, we need to be thinking about people who represent communities that we want to serve, bring all those people into the conversation.
Thank you both. Thank you so much.
Thank you.